Brock, Chris, finally, we actually managed to connect today. Thanks so much for your patience. Like playing ping pong with you. You hit it back to me, I hit it back to you. Finally, we're here playing the game. I'm very happy to meet you. Why don't you start off, if you would, please, and introduce yourself, name, rank, and serial number. What do you do there at Kirkland Capital Group? And then we'll roll into the questions.
Well, my name is Brock Freeman. I'm at Kirkland Capital Group. I'm the COO or Chief Operations Officer. The reality is mostly what I do is take care of loan flow. Everything from getting loans in from brokers to underwriting them to making sure that they fit with our guidelines, training underwriters, a whole bunch of stuff with that. I do things here and there on the marketing side, et cetera, as well. So.
Chris.
Hi. I'm Chris Carsley. I'm the Chief Investment Officer at Kirkland Capital Group. I basically do everything Brock said he didn't do. I basically work with a lot of the investors. I oversee and work with accounting and portfolio management and risk structuring of the fund. So anything that does with the metrics and the movements of the fund's operations outside of the underwriting and origination and everything else, that's what I'm in charge of.
So I'll tell you what, my next question actually is, what is the story of your company? But I'm going to pull it out of sequence because you actually have a very interesting value proposition. So I'm interested first in knowing, what is your company's investment strategy? Kind of give me the high level overview. What do you do? And then we'll talk about how you got to doing that.
Sure. Brock, do you want to take that or do you want me to fire away?
Go because
okay.
I think
Sure.
From an investment standpoint, you're probably going to bring it down. And then once we get down to the nitty gritty of loans, I'd love to take that.
Sure. At a high level premise, we are originating MicroBalance commercial real estate loans in a capacity constrained area because we're targeting a market under the sub $1 million loan base. That gives us pricing power and it gives us the ability to really get in and build relationships with smaller borrowers as they grow. One of the things that we found ourselves continually doing is working with properties that are workforce housing. We're working with some different minorities in a variety of different secondary and tertiary markets. So the key aspect there is we can actually obtain outsized returns because of the illiquid nature of the inability for people to borrow money sub $1 million, because we know banks and other lenders are just not in this area. And we can actually do that in a timely and consistent and thorough manner.
MicroBalance. What does that mean exactly? What is MicroBalance?
MicroBalance, really, we came up with that term because we realized when we used the word small, everyone thought we were writing $25 million loans. So we had to come up with a new name and sort of coin that, because we're really looking at those loans that are $250,000 to $1 million. That's really the area that we target.
Okay. And when you say pricing power, that's because you're able to lend the entire amount to a single sponsor and control some of the terms as a result, presumably.
Correct. And also the nature of this market is most of your lenders out there are not writing loans less than $1 million. It's the old adage of why do a $500,000 loan when I can do a $50 million loan and make the same origination points and fees. And I'm not arguing that point. That's still valid at a certain level. But there is a lot of different interesting portfolio risk factors that fall in our favor by writing these small loans.
All right. And so what kind of, these are all real estate collateralized. So tell me something about the kinds of loans. This is actually, you know what, we're actually talking about the fund, which is not what I wanted to do. We'll get to the fund in a minute. Instead, tell me about both of your backgrounds. Let's spin back in time. What brought you apart? No, if you're not watching this, you're just listening. I recommend that you do watch the video, because right behind Chris is a crazy poster that speaks to his technology background. What's interesting is you do talk about technology expertise in your investor memo and some of your docs. I'm interested to know, what's your background? Tell me about that.
Sure, Brock, why don't you?
Well, for me, Yeah, sure. I actually, funny enough, both Chris and I come from finance. I mean, we both have a degree in finance, but quickly after that, we kind of went different ways. I did start off in capital markets. In fact, one of my first roles was in Taipei, working in Taiwan there on the Taipei for a local company, local stock trading, basic securities company, writing reports on the Taiwan stock market for institutional clients. But then I came back to the US and I went into the loan business.
Did you learn to speak Cantonese while you were there?
I spoke Mandarin.
Mandarin in Taiwan, is it?
Okay.
Cantonese is just Hong Kong, right?
Hong Kong and the area next to it, yes.
Okay.
Guangdong province or Canton province, yeah.
Okay.
Very different languages, actually, completely different languages.
Chris, what's your background? How did you, and then Chris, tell me your background. Then how did you come to meet Brock and have a meet?
My quick background, we'll sum it up because I've been very fortunate to do a lot of different things, but I've always been in finance. I started trading when I was 13 years old. I always knew I wanted to be in investments. I managed people's money, got the opportunity to be a hedge fund trader. Obviously dealt with some securities analyst work on the technology side. Hence, as you stated, the poster behind me is the taxonomy of the .com universe. Then I transitioned in out of when I left the hedge fund trading world. I actually went in and continued to traffic in the alternative investment space, which was venture startups. I really sort of labeled myself as sort of the investment specialist because I found myself dealing with M&A, investment banking, everything all related to the private markets. And the short story of how we met roughly 23 or 24 years ago, both Brock and I were martial artists, and so we met and have maintained contact with each other, even though our careers deviated. We stayed in touch, even though we're in separate countries sometimes. And then, real quick, he came to me in 2019 and said, "Hey, I think I have an idea for a fund, and I want to get your opinion if you think we can build something around this." Well, here we are. Obviously, I thought he had a good idea.
All right. So tell me, that's very interesting. So tell me about your background in commercial real estate, which you talked about now, which is who you're lending to. So how's that? How did that come about? That's what you chose to lend to?
The truth is, that's not where I started. I actually started on the residential side. And then a couple of years ago, decided when I wanted to go back to real estate, I wanted to do commercial. Didn't want to go back to the residential side. And because the residential side had really become very, very commoditized. And maybe I was part of that commoditization. Whereas early on, I had worked for what now is called non-QM or a subprime lender at the time, and really automating their operations. Everything from the loan origination that came from the brokers, underwriting, secondary marketing, all that stuff. I went from being a finance person to, I had a knack for automating things. So went over to the IT side and started automating and built a whole automation system for them. In fact, the first web-based system in the industry for at that time. Everything was green screen. So I'm kind of dating myself there, but that's okay. And then part of the reason that I started being interested in commercial was simply because this area was ripe for disruption. And that's simply, you've seen it, Adam. You've done a ton of very interesting podcasts and everything on how this area is being disrupted by sort of the fintech or prop tech. And I felt like, hey, you know what? I did this before in residential. We can do this again in the commercial, that micro space. So that's sort of what's driving this whole thing. There's a number of different factors, but that's one of them.
All right. So actually, let's drill down on that. So that's an interesting topic that comes up a lot. That is part of your DNA. So less so directly fund related and more who you are and speaks to your strengths. Tell me about tech and the way that you use tech. You use the term prop tech, etc. So just tell me how you do that, how you use that today in your current business.
My approach has always been a people-centered type of tech approach. So to give you a little background, I'm involved a little bit with the blockchain community, which is always just a great fun when you go out there and you go to these blockchain events and you get these blockchain maximalists that are like, oh, we're going to completely disrupt the industry and no one's going to be left. There's going to be no middleman, nobody, we're going to eliminate it all. We're going to eliminate real estate agents. We're going to eliminate loan agents. We're going to eliminate people. And I was always a head scratcher because my approach to technology is we can use tech to leverage and quickly do things that are repetitive, that are really not where a human can do value add. And I think that those are great places to apply technology, where you can reduce errors, where you can use tech to leverage things that people have a hard time doing, seeing patterns, AI type of stuff. But there's plenty of places where humans, you just can't get around it. I mean, when you're talking about looking at a local deal, Adam, and I'm sure you'd agree with this, there's nothing like having someone with experience, with boots on the ground, that's going to be able to tell you, hey, watch out for this, or here's what I think. Honestly, I don't see how you can automate that or use blockchain for that. So what we look at is like, how can we marry the two? How can we take and automate things that are just really great at automating because they're repeatable, they're easy to automate, and then pair that with humans that really understand how to leverage that and really sort of 10x or 100x the value of what a person can do leveraging that technology.
Got it. I get the theory. Give me a practical example of how you apply that to day-to-day life at Kirkland.
Well, like a lot of our inbound loan requests are automated, but we still have a person look at them. Even in our goal. So let me tell you kind of our goal, and we're slowly getting there, is to use all this data that's now becoming available out there, just incredible amounts of data that we wouldn't have been able to leverage even 5 years ago to do what we want to do, which is this focus on this MicroBalance niche under $1 million. So you go and you get that AI, whether it's economic data, whether it's rental data, all this stuff, and you can put it together. And essentially what I think is generate more, not approvals. So no such thing as automated approvals, but what you can generate, I think, is a lot of automated red flags, things that humans can easily miss. You look at, your eyes glaze over after you look at 10 loans in a day and you miss stuff. And that's what really gets people in trouble. Instead, what we want to look at is like, how do we automate the ability to red flag those items so that you don't miss something on the 10th try because you've looked at it and your eyes are glazing over. Then we still have that human be able to look at something and say, is that a legitimate red flag, or can we mitigate that, or is something that I look around? Does that make sense? It's almost like, okay, how do we pare back and look at the cream of the crop? How do we use automation, AI to do that?
Fascinating. Chris, tell me something about, so Brock has been talking about the strengths of Kirkland. Mm-hmm. Tell me something about the weaknesses or the challenges that you face and how you're overcoming them.
Well, we're an emerging manager. There's constant challenges of being a starting manager. You're limited in who can invest in you. My background is on mostly the institutional side. So a lot of my network, the big RIAs, you're just not big enough. They need to write a $10 million check and you're managing $5 million. That's just never going to happen because they have certain mandates. So there is the challenge of being an emerging fund. We have the right idea. There's no table we sit at and people go, oh yeah, you're not doing something I'm interested in. I mean, yield capture on a risk adjusted basis is literally what everyone's looking for. It's just a matter of, are they going to come get it from us? I mean, there's lots of different yield capture funds out there, not just in real estate, but a lot of different sectors. But that's probably one of our biggest challenges is just, slogging through sort of as a startup company, i.e. an investment manager, and being that emerging manager. It's not a lack of experience from myself or Brock. It's really more of, well, we just have to find that right group of people that are saying, listen, I do invest in emerging managers, and this is how I structure it. So that's probably our biggest challenge.
I'm dying to talk to you about the fund, but I do want to keep these two sections separate. So we will talk about the fund in more detail, but let's dive in just a little bit. So you provide micro loans to real estate investors. What are the asset classes that you look at?
Multifamily is our favorite. So we'll generally look at those and take those first, simply because everybody needs a place to live. And so those tend to do well day in and day out, even during the worst of times.
So I hear that all the time.
Seen the worst of times.
I hear that all the time. Everybody needs a place to live. And the only reason I mention that is because everybody needs to eat too. So, so why not finance farmers as well? Just you know, a total.
No, I think that's a great question. So
question.
You know, we'll do some of the other typical office retail, but let me talk about that for a moment. I know nothing about farming, aside from growing up and being sent out to weed my parents' vegetable garden.
Yeah.
You know, there's something I appreciate that Buffett and his sidekick, although he'd probably kill me for saying a sidekick, said, which is, you know, when we look at certain things, we need to target and we need to narrow down into something that is not, that might be complex, but at least as complex as these that we understand. And Chris and I really have that same type of approach about asset classes. You know, it's one reason we don't do mobile home parks. We looked at a few of them, and I said, man, there's just some things we don't understand here, and we could take time to go understand it and probably learn about it and take 6 months or whatever. But is there enough other things out there for us to really invest in or make loans on that make sense? And we have our heads wrapped around already. I'd rather stay with those and not dig into complexities that are going to really challenge my ability. I don't want to look after we have a loan go south on it and go, man, we were blindsided by that. We could have never even anticipated that risk because we just didn't know. We didn't have the experience. I don't want to sit in front of my investors and say and repeat that.
So what are the last three questions? Last one. What are the opportunities ahead of you? Where do you see what is the big opportunity? Just starting out, you started in 2020. What are the opportunities? Why are you doing this?
For a couple of reasons. I mean, obviously the one is make money. I mean, I think there's a lot of money to be made in this, but really we try to think holistically, and there's two other reasons. Number one, this sort of middle level or, you know, micro level is really the salt of the earth of America when it comes to commercial real estate. I think that when you're talking about the smaller multifamily, when you're talking about the smaller strip mall retail or a car wash or, you know, a retail or you know, restaurants or a little small office or multifamily medical office, these are things that we see a lot of just normal people start to get into and can actually afford to invest in. And I think that's great for two reasons. Number one, we see a ton of minority investors in this that are going and moving up from maybe owning a few rentals to owning some commercial real estate. And this is their first stop. And so we're really happy to be able to provide that financing that wasn't so easy for them to get before. And number two, it really provides key housing and for first responders. So creating, you know, taking a place that was Class C, turning in a Class B, that someplace where our first responders can afford to live and want to live. I think that's important. And a lot of these are in minority communities or minority, you know, communities that are majority of minorities. And then on top of it, a lot of these retail outlets are not some expensive high-level mall. They're a mid-level place where a lot of people can get started with a business. And we're super happy to provide those opportunities where all of us are making money at that sort of renewing America. I think if you want to talk about, you want to invest in America, this is where you invest.
Fascinating. All right.
I got one other answer to that side,
Go ahead, Chris.
And it's much more on the fun side. This gives, when I was sitting down and when I had finished my due diligence on the real estate and I had to actually start building the fund and thinking about the actual metrics of what this was going to look like and how it was going to operate, it really opened up the opportunity to bring something I knew that was in demand in a form to investors that offered full transparency and allowed me to create really one of the best alignments I've actually seen in creating funds, even other funds that I've worked for or built. This one allowed me to really be able to say, there's nothing you can't ask me and there's nothing I won't show you. And that's rare in a lot of different instances. when you're dealing with alternative investments. But I mean, just as a quick note, one of our investors, she was an actual alternative fund auditor. And we actually line item out our expenses, and she said, well, there's something wrong with your fund expenses. And I said, okay. So we hopped on a phone call, and I literally just jumped on, screen shared, and just started showing things about the breakdown of the fund expenses. And she was amazed at like how quickly I was like, well, here everything is, open kimono, what question did you have? And it turned out that the fund expenses weren't wrong. They were just lower than she'd seen historically in other hedge funds and other funds she'd reviewed, which is the second point. We're able to run this to where every move we make, because Brock and I are large investors in this fund. So we're treating our own money really side by side, really controlling costs and operations at really every step. So that's the other reason I was really excited about. Not only do we have the investment theory in the right angle, we had the ability to create a platform that was, going to be really aligned with investors. That was really important to me.
Brock Freeman, COO and managing partner. Chris Carsley, sorry.
No problem.
CIO, managing partner. Thank you very much for sharing with me your background on the sponsor profile for the Deal Time podcast. Thank you.
Thank you, Adam.
Thank you very much.